Now, with all the civil unrest going on across the United States and the conflicts breaking out in the Middle East, there's a subject that's going under reported on how one of the banks this year have failed in the United States in 2025. And there are a lot more bank closures slated on the list across the country, leading to the question, is your money safe? Now, in this video, I'm going to show you some steps that you can take to secure your financial situation and to make sure that you and your family is not caught in a financial crisis. Now, if you're new to this channel is designed to help you no matter where you are in your credit journey and how to leverage your credit to make money. So if you like that kind of content, make sure you subscribe to this channel and give this video a thumbs up. And if you go to my website, I give you a free heart inquiry removal package that you can download for free. And that link will be in the description of the video and in the pinned comment section. Now, in this article by Banking Dive, Pulaski Bank failure spurred by impaired capital, FDIC OIG. The shuttered Chicago-based lender had deposit liabilities of nearly $20.7 million unaccounted for in its core system, the regulator's office found. Chicago-based Pulaski Savings Bank had deposit liabilities of at least $20.7 million unaccounted for in its core system, which depleted the bank's capital and eventually led to its failure, according to a review by the Federal Deposit Insurance Corp Office of Inspector General. Since the assets corresponding to those deposits were not identified, the recording of the deposits exceeded the bank's equity capital, leading the lender to become critically undercapitalized, the report said. The estimated loss to the deposit insurance fraud was roughly $28 million, 62% of the bank's $45.9 million in assets, compared to an average of 17% for other bank failures over the past 5 years, the report said. The OIG called for an in-depth review of Pulaski in its report published Monday, given its findings. Pulaski, shuttered by the Illinois Department of Financial and Professional Regulation in January over what the agency called its unsafe and unsound condition, along with its impact capital position, marked 2025 only bank failure so far. Millennium Bank of Des Plaines, Illinois, agreed to acquire the troubled lender in a sale facilitated by the DFPR and the FDIC, which was appointed receiver. The FDIC at the time noted that suspicious fraud brought about the relatively high $28 million loss to the DIF. Pace of U.S. bank branch closures pick up in Q1 2025. Thanks in part to the actions taken by two of the largest banks in the U.S., branch closings accelerate sharply on a subsequential basis in the first quarter. There were 148 first quarter net branch closings, up from just 21 in the fourth quarter of 2024, according to S&P Global Market Intelligence data. Most active banks, U.S. Bancorp, reported 50 net branch closures in the first quarter, the most in the entire industry. California accounted for 18 of those closures. Wells Fargo and Company was the second most active net closer with 23 net branch closings in the period. Citizen Bank Financial Group was the third most active net closer, reporting 21 net branch closures in the first quarter. Bank of America Corp, PNC Financial Services Group, and Huntington Bancshares followed next with 18 net branch closing apiece. Now, as you can see, why you haven't heard much reporting on what took place with Pulaski Bank is because there was a level of fraud, that they were actually cooking the books to make that they had more assets than they really did. And they were quietly sold off to Millennium Bank, and the bank shut down for a few days and then reopened because they did not want to cause a big outcry from people to may look into how these banks are really holding on to assets and how much liquidity that they actually have. Now, this took place back in January, around the 17th of 2025, and you haven't heard much reporting. And when they found out with the investigation what was going on, you still don't hear a lot of reporting because they don't want the general public to panic. And with these bank closures spiking, is this leading to a situation of that banks may not be holding the liquidity that they're reporting? Now, in the case of Silicon Valley Bank, that closure led to by them actually holding assets, but most of it was in treasury bonds. And now with the high interest rates of the Feds, it actually, when the Fed increased the interest rate and they were forced to sell off those bonds at a discounted rate and a loss. Now, is this going on with other banks? And recently, Moody's downgraded the United States credit rating because all of the government debt. And with the big, beautiful bill and the tax cuts to go along with that, that can even further increase the US debt at higher levels and possibly causes the US to default on their debt payment obligations. So if you have other banks also holding US Treasury and bonds and the interest rate goes up, this can also cause a loss of assets that other banks are holding also for liquidity. And this can cause a problem in the banking system. One way you want to protect yourself is not putting all your money in one bank. Make sure you spread your money out and have different banking relationships. We saw with Bank of America when it had that system breakdown and people accounts was zeroed out. People did not have access to their money. I myself is a Bank of America customer. I didn't have that problem because I have money other places. So you want to protect yourself. And many people said that was a cyber attack. And with all this unrest going on in the world, you never know what can happen. So spread your money out. Now, another way I protect myself is getting gold and silver assets. So with this silver, I get American Silver Eagles or even Canadian Maple Leafs. This is government issued money. And so with gold and silver, these are real assets. And with all this money printing that's going on, these assets are going up in value, where if the banking system shut down, cyber attacks, you can barter with silver and gold, and you actually have an asset that goes up in value because you never know what is going on. And with all this money printing, it's really looking like the dollar is losing value at an unprecedented rate. So you may not want to save all your money in cash. And I get mine sent to me every month and hold my own assets. I use Quicksilver. They have a wealth building program. If you want to check that out, I'll leave the link in the description of the video and comment section. So that's another way that I try to hedge myself just in case something take place. Also, you may want to have your own assets where you control, like real estate assets. One of those things with real estate assets, if you are a landlord by myself, if the money system crashed, guess what? Whatever the new currency is, that person is going to have to pay you in the new currency, and controlling even where you live to be able to have your own crops that you can grow. If you own land, having those assets can help you secure yourself and your family to make sure you can control something. If you're renting, you may not have that control over where you stay. And that is one of the main places that you want to secure where you're living. And with my elite credit system, many people were able, like Sean, to increase his credit score from a 612 credit score all the way up to over 770 in a matter of 6 months. And now he's at an 803 credit score, and he was able to get business credit. So it doesn't take long for you to clean up your credit in order for you to obtain property or even buy a home. I'll leave that link in the description of the video with my AI software and my coaching. And you want to make sure that you're cleaning up your credit and you're getting your hands on assets. So if anything goes down, you're controlling at least where you live. And so with the banking system and all that's going on, you want to make sure that you have assets. It is very important outside of the banking system. And now with President Trump also removing sending out checks, paper checks for people who are getting their Social Security, and even with IRS checks, that everything with the US government will go digital and will not be paperless. This ties all of your money up in the banking system. And with these banks and higher interest rates, if they maintain, can cause real problems in the banking system that might not have been discovered as of yet. So make sure that you protect yourself. So hopefully this information was helpful. If you have questions or comments, leave it in the comment section. But if you have more detailed questions for me, you can go to my website and all your questions go directly to my cell phone. I hope to see you guys in the next video. Stay tuned.